everybody, welcome back to Metals and Momentum. My name is Anthony, and in this video we are going to go over a number of different things, but what I want to talk about is just going back to the top asset of 2026, silver to oil ratio. I posted this video 12 days ago explaining the thesis around the whole silver to oil ratio and why I think oil is really undervalued right now, and I did not expect this trade to play out so quickly. Now, I don't know if it's over. I guess, like, you know, any asset goes up and down. So technically it's just a never-ending cycle of trades that could go on. But this video got a lot of views, 1.3K at the time of recording this video here. And that is more views than I normally get on my YouTube channel. So what I did was I separated my newsletter this week into two articles. So I always write an investment thought of the week. It's a bi-weekly newsletter. So you on a bi-weekly basis, you're going to get an investment thought, and then you're going to go over a trade and investment recap. These are things that I'm actually doing with my own money. And then in the free tier, you're getting access to the value vein, which is like a 1-minute kind of read. You could just go over that and learn something valuable about trading and investing. And then I go over my weekly watch list. What are the things that I'm paying attention to most? And then for paid subscribers, there's two tiers to the Substack that I write. $9 a month if you want to join the paid tier. You're going to get trade notifications, which paid out handsomely over the past 2 weeks. And then you get access to a longer term portfolio that I'm using technical analysis to guide myself and my subscribers through using stoplight stock indicators. So for example, it works exactly like a red light, green light kind of system, and you're just getting an update to the stoplight stock section on the paid tier of Substack. So what I want to do in this article is go over the big profits made on this trade over the past 2-week period. Like I said, this video has gotten a lot of views. I think a lot of people are really interested in that. So I will save the investment thought for maybe next week or something like that. I have some time next week that I'm going to come back and maybe record another video on the YouTube channel. And yeah, this trade has just paid out handsomely. I do want to say before we start, you know, there's 2 new paid subscribers on my Substack. The links are down in the description below if you want to join that. But I just want to say thank you so much for joining the paid tier of Metals and Momentum. There are interesting things going on in the market right now. It was a busy 2-week period, but we were able to capture some gains, and I know some of my subscribers traded alongside me as well, and that's one of the big benefits to getting into the paid tier, which is those trade notifications, because I don't trade a lot, but when I do, I'm pretty confident about those trades, and we timed this trade perfectly. It was so beautiful, and we'll go over it right here. Because this was just a thing of beauty. When you break this down, I'm going to show you how essentially this was like just perfectly traded. So in a nutshell, the readers of last week's newsletter and, you know, the previous years, we started to accumulate oil stocks on December 26th. So it's somewhere right around here or so. And we were anticipating this this green channel to actually play out because there was a big wedge pattern that was happening on the price of oil. So we're looking at WTI right now, and we can see that the wedge pattern is playing out right here. And then I established an area where, you know, we have acceptable support. So for example, I said, here's the zone that is likely not going to be broken in the short term if we get down there. Now, it could be broken in the coming weeks, but for this wedge pattern to actually play out, what I was thinking is we're probably going to reach this support zone. And when we reached it back here, we actually tapped the very base of this little channel. And I said, okay, now we're getting this bump. And now it's game on. This is signaling to me, there were a couple indicators that I was looking at. One was the MACD, the RSI, and the volume. all of them were signaling that there was going to be a breakout to the upside of this wedge pattern. And I was pretty confident that that was going to play out. So on December 26th, which was this little candle right here, I'm going to zoom in and get rid of this here. So on this candle right here, yeah, somewhere around here, we started to accumulate the oil stocks. I chose 4 of the best stocks that were essentially the most oversold. So that way, if oil did pop, then we would start to get a significant movement back upward in oil. So one of the stocks that I chose was IMO. So we can see on this chart here, this is IMO. And what ended up happening is on December 25th, 26th or something like that, we started to see that it touched the 200-day moving average, or just about touched that 200-day moving average. But here we slammed into the 200-day moving average, and then we bounced right back up. To me, that's a bullish signal that we are going to experience a fairly significant bounce in the this stock. And we went the most heavy in IMO, and it played out really, really perfectly. This is definitely the best gainer on the year here. But just going back to oil, maybe, oh boy, this, let me just open up close that saving. Let me open up a new window here, so that way we can get back to oil. Okay, that'll work there. Sorry, technical difficulties. But anyways, once we started to get that pop in oil, then you could see that IMO started to really, really pop. And not only did we make the biggest gains in this stock, but it was also the most oversold that we were watching. So we got this breakout here, and then what I started to monitor was a reversal, because we were running into the 200-day moving average. Generally, when you're trying to cross a 200-day moving average, either if you're trying to break up or break below, that tends to be a little bit of a difficult move, right? So if we're slamming into it from the downside, generally you're going to get some sort of pullback. And then you have to watch volume and RSI and things like MACD to understand, are we going to, go back upward and break through the 200-day moving average, or are we just going back down lower? And in this case, I started to monitor this. We saw that reversal candle form right here. Trade notifications were sent out to my paid subscribers, and we were exiting the trade. And this entire trade took about 2 weeks to play out, 3 weeks or so, from December 25th to January 15th or something like 14th, I think that was when we sent trade notifications out. And what a trade it was. So before I show you the profits and the losses on some of these stocks, actually there was no losses on this trade. So let's just go over what I did right. So one of the things that I definitely did right was identify that wedge pattern. We talked about the wedge pattern on oil. This was the blue line right here that we were looking at and following. And usually wedge patterns will play out to the downside and go like this, or they'll play out to the upside and go like this. Beautiful that it played out to the upside here. And there's a few indicators that I was watching to signal that this was going to happen here. So yeah, just absolutely beautiful. The other thing that I did right was identify that key resistance points where the wedge pattern would actually end. So not only do you have this corner right here where it essentially has to decide, are we going downward or are we going upward? But also identifying that key support area. What's the acceptable point where, you're going to let it slide through the first resistance? Where is that next point of resistance where, if we break here, we're in big trouble? And that's one of the things that I did really well on this trade, because back in December, we actually started to get into this little zone of acceptable kind of, just a point where the floor would be put in. If we broke down here, then we'd be a little bit more cautious, and we might not have entered into the trade. But after this bounce here and back into the wedge pattern, then we started to get, okay, this could be really, really good. And that pop that we got, you guys saw that. So the other thing that I did right was reviewed and found 4 key oil stocks and accumulating those stocks under or over a short period of time. IMO, mentioned that as the best mover. I had the most money in IMO because of how the stock was actually oversold. And when you go back to IMO, you could see when we started to accumulate, when it was close to the 200-day moving average, look at how oversold we were on the MACD indicator. It started to turn back upwards right here, signaling that a reversal or at least a decent bounce was going to happen. And look at that. It definitely did. And also identifying that 200-day moving average, that's a really key thing as well. Once you start to tap on that 200-day moving average, generally the first time that you tap on that, maybe you're not going to go and break lower right after tapping it for like the first time in a little while. Like you would have to, let me go back to, this was May of 2025. That's when we've tapped that 200-day moving average, but then we saw this big move upward right here. So now we're looking for the next point where it's going to tap that 200-day moving average, and here it did so right there. And just beautiful. That was another key thing that I did right. It was no coincidence that I had the most amount of money in IMO, and I sent trade notifications multiple times to my subscribers saying, I'm purchasing IMO. I'm purchasing IMO. So hopefully my subscribers took note of that and also moved a little bit heavier into IMO as well. The other thing that I did really well was not buying all at once. Like for example, when oil was going back and forth there, like I said, in that zone, I bought right around here. I bought right around here. I think I bought like right around here as well into January. And that was my last purchase. And when we hit this like low in oil, IMO dropped a little bit more as well. Not close to that 200-day moving average, but we did snag purchases right around that 200-day moving average. And that's why we did so well on oil and specifically IMO. So was there anything I did wrong before I get into the results of this trade? I think I went a bit too heavy into this trade. Although it worked out, I definitely felt a little bit uncomfortable, and I was definitely itching to sell when oil was around here, right? So I said to myself, let me wait one more day, and we're going to watch and make sure that we hit that 200-day moving average and then drop lower. And that's going to be a signal to me that, we need to get out of the trades. On this day right here, I'm not too sure why the dates are not lining up here, because this is definitely not. Oh, I guess January 13th. Okay, sorry. So on January 13th, I was itching to sell for sure. I was up a fairly significant amount, but if we waited the one more day, we would make a little bit more, which we did, and we would also get. I guess we would answer whether or not we were going to break that 200-day moving average. So I decided to wait at around 3 o'clock. The whole day, this candle looked completely different. But around 3 o'clock, we started to get this candle that looked like a cross. So when it looks like a cross like that, and then also is a red candle, that is a reversal indicator. And especially when you have these long wicks that happen right here, that is a reversal indicator. And I sent trade notifications at about 3:20 or something like that. So subscribers had the opportunity to get out. I even messaged a few subscribers directly. And I said, reversal candles in. I think we need to consider leaving the position. But overall, I definitely went a bit too heavy on this trade. It was a little bit uncomfortable for me, but still, the trade worked out really well. The other thing that I did maybe wrong was I should have trusted my past learning a little bit. On the day before we got that reversal candle, I knew what reversal candles were. It wasn't like I just learned about it and then saw it the next day. I should have watched and just been a little bit more calm during the trade. But I inserted all the information into ChatGPT. I do keep a trade journal, so I see how many shares I bought, at what prices. And then the total, and then I just work out the math with ChatGPT to understand how much profit and loss I've made on each stock that I bought. So, like I said, I identified a number of oil stocks, the 4 key oil stocks that I was looking at the time. They were the most oversold, especially IMO. Went very heavy into that. I put $11,000 into IMO, and that was the biggest gainer for me, especially because we caught this so low. So the total gain on the IMO purchases was 12%. The XOM is ExxonMobil. Put a little bit of money into that. At that time, it wasn't like the most oversold, but I figured having one of the best oil stocks in the holding would probably result in a decent gain, and this was the second best gainer there. But I thought Exxon might not pop as much because it wasn't exactly oversold, but it wasn't. It's just like a big stock, so like I didn't think it would move all that much, but 7% is no joke either. I did SU. I actually had some US dollar and Canadian dollars. This one trades on the Canadian Stock Exchange. It also trades on the US Stock Exchange. So I purchased shares of both, but I did the math to show you the capital gain deployed in Canadian dollars. That's $6,000 there. Made 6.65%. That equated to $400 on SU. Last stock that I purchased, again, on the Canadian market, but also available in US dollars on the US Stock Exchange as well. Canadian Natural Resources. This one, I just had a little bit more cash to deploy, and then I had also sold off some of my SGov, which is a 0 to 3 month treasury bond it's a fund that mimics the price of the 0 to 3 month treasury bond. So I sold off some of that. So that way I could just get one more position in there because I was looking at CNQ, and the chart set up on CNQ was really good. I could pull that up right now here because what I was noticing is that we were like somewhere down here, breaking the 200-day moving average, but there was also a wedge pattern playing out back here, and that extended and started to act as a little bit of support right here. So around, I think this one was later in the trading session here. So it was somewhere around right around here. I think we started to send trade notifications out on that one as well. So once we established that support, there's the 200-day moving average. We saw a break upward. I said, this stock looks like it's game on as well. Had a little bit of money left over, so we put it in there too. So the total capital deployed on this trade, $21,828, and the total profit was $2,102. That is about a 9% gain total. We had some stocks that did under 9%, CNQ, and then well over 9%, that is IMO. So that is the breakdown of the trade that we just took with oil. And that was just such a great setup. And like I said, I don't want to trade a whole lot. I want to take the best opportunities and go somewhat big into those opportunities. I want to look at a chart and see all the indicators lining up, and when I enter that trade, I want to make sure that it's going to be really hard for me to lose money. So that's what this setup was. Now, will I go through this breakdown on every trade that we make? No, I'm going to let you guys do your own math. If you follow along on Substack, then you can do your own math and work out the profit and loss for that you choose to kind of make in the trades. But I just thought this trade setup was so good, and like I said, it was just hard to lose money at that point. So these are the indicators that I kind of watch and go through. I do want to point out in 2025, I just took I think we had maybe 6 trades total. It was a very low volume year, but every single trade that I took in 2025 made us money, which was wild. And I'm looking back at the end of the year and thinking the trade setups that I took over the span of 2025, it was the 5 or 6 trades that we did. All of them were great opportunities, and we were able to capture gains on every single trade. Now, going in the future, are there going to be trades where I do lose a little bit of money? Absolutely. There will probably be one for sure. But these are the opportunities that I try and look at, and I just want to make sure those setups are top notch, so that way it's, like I said, hard to lose money. And that's kind of my style. So there's 2 new subscribers over on my Substack, and they're going to join. They've joined. One of them did catch the oil trade there, so good on you for joining and catching that. That was fantastic. But there's a new subscriber that I have on my Substack, and he's probably going to be thinking, what's going on? We're sitting on our hands here, right? Well, I'm looking for the best opportunity and the safest way that we can make money using what the technical analysis and the value type of investing that that's kind of how I operate. So let's hop over to the value vein on the screen here. The value vein actually kind of relates to this article. Like I said, I separated the newsletter this week into 2 articles. So there's on my Substack, you can see, I'll link them down below. There's an article called "Everyone in My Neighborhood is Getting Evicted. Is 2026 the time to buy a home?" And this is another ratio chart breakdown. If people are unfamiliar with the gold to home ratio or home to gold ratio, what I did in this article is apply a little bit of technical analysis to the home to gold ratio. So there's the value vein here shows you this chart, and the same it is shown in this chart in this article right here. So the thing that we talked about is how this is a bullish chart pattern right here. So you can see that the chart will go upward. It will establish some sort of floor. So once we break through, come back down, now there's a floor here, and generally there's going to be some sort of trading pattern later on or earlier where you can establish some sort of floor. So the chart's trading around here and then comes back down and then breaks up into this kind of floor and ceiling, right? So you establish the floor and ceiling where the chart has essentially bounced and then come back down. One of the things that I would like to do in this simple chart setup is I would love to buy the floor here and look for the next point of resistance and the chart to actually hit the ceiling. Then I would go ahead and sell the ceiling, because we don't know if we are going to break lower and attempt another, stretch down to the floor, or we are going to bust through the ceiling and actually break out. We don't know when that's going to happen, right? So these are the chart patterns that I like to play with, and this is what I would do: is I would establish my floor and ceiling, buy the floor, and then look for that movement up to the ceiling. And then if it does break out, I have sold my position. I can re-enter the trade if it does break out, and we can ride this a little bit further upward here. And I've done this multiple times. And one of the reasons why I would want to sell the ceiling is because we don't know if it's going to break out, and you limit your downside if you buy the floor and then sell the ceiling, because, like I said, you could ride this for, say, let's say long-term investors, they're always talking about holding for 3 years or whatever. But if you bought right here, you don't know what's going to end up happening. You could come back and touch the floor in a matter of weeks, and then maybe even break down lower, right? So the risk that I think I would take by buying the floor and selling the ceiling and then looking for that breakout is very minimal. So that's one of the things that I was applying. These are the principles that I was applying to the home to gold ratio. Now, on the opposite end, a bearish or going lower kind of signal is exactly the opposite. You have a chart trading downward. You would essentially establish your floor and your ceiling. You would buy the floor, sell the ceiling, and then watch out. If it doesn't break out here, then you're going to expect that the floor is going to be tapped, and eventually, even if it trades upward, hits the ceiling one more time and comes back down below, now you're in a breakdown, and then you would just sell the position, right? So you've already sold the position at the ceiling, and then you just watch out and watch for this chart to go lower. And one of the things that I was going over in the real estate to gold ratio is exactly that. So what I did was apply a floor. Where is the floor on this chart? Where is the ceiling? And what you could see is this played out in real time. So this is, again, the home to gold ratio. How many ounces of gold does it take to buy an average home in the United States? You can see that it's traded down to the floor, up to the ceiling, kind of traded, bounced around a little bit here, even like fake, kind of broke out to the upside, but that turned out to be a fake out, right? So we trade back down low, and what we could see is actually happening right here is we're getting a breakdown right here. So this is 129.6 ounces of gold to buy a home. So if we take the lesson that we learned in this simple little chart breakdown here, is if this breaks lower, what is going to end up happening is that the chart is likely to go down further. So what does that mean when we're talking about the home to gold ratio? Well, if you're thinking about buying a home, you would actually say and use technical analysis on this chart and say, this is actually probably going to go down lower, right? So in the future, it's going to require less ounces of gold to buy a house in the future if you apply the technical analysis. Now, one of the things that we did up here is we got this little pierce of the chart, a pierce of the ceiling. Maybe we could have moved this ceiling up just a little bit more, but still, this peak right here, that is a pierce of the ceiling. And then we trade back down into the channel that we were working in. The same thing could happen here. Now, we could come down a little bit further and then bounce back up, but that would signal, that maybe that trade is not actually going to go as low as maybe we thought. And that could totally happen. Now, I did even in the article here, I did even establish, right here. So in contrast, a bullish signal for real estate would be if the ratio can get back above 139. That would actually bring us back into this channel and signal that, this was a little bit of like a fake out essentially, right? So 139 on this ratio is something that I would definitely be watching for. But if it doesn't get back up there, then that's signaling that, prices in terms of gold are actually going to go down. And that could mean that the price of gold just continues higher, or the price of gold stays the same, and then real estate just becomes much more affordable. And I go over that in the article that we're looking at right here. And I'll tell you a couple signals that I think that real estate is actually going down. So you can review that on your own. So let's go over the weekly watch list. So silver is one of the charts that I'm definitely paying attention to. I'm going to hop over to TradingView right here. Now, so silver has just gone absolutely nuts. Like, I think we're pushing like 200% on silver over the last like year or something like that. It's absolutely crazy. I've been holding physical silver for 11 years. And because of this recent move upward, I worked out the average move per year that I've had for silver. And because silver has risen so dramatically in the last year, the average over the span of 11 years is 40%. This is absolutely crazy. And at some point in time, we are going to top out on silver. What I think is probably happening right here is we're getting a little bit of a rollover, and we're going to come back and touch the point where, you know, it just broke out of on January 12th here. So we get that breakout. This is our confirmation signal right here. And then we start to roll back over, touch the breakout, the support level, and then maybe continue higher. It depends if we break this level here, but silver is almost $100. And one of the things that I was thinking about is starting to swap silver for gold. And that is definitely something that I'm thinking about. And I'll show you the S&P chart in a moment here. I'm just going to get that prepped up here, because the S&P 500, if the S&P 500 rolls over, then silver is definitely going to get hit. And you want to protect some of the gains that we've made so far for sure, because if you're a long-term investor in silver, I started buying when it was like $22 Canadian. That would equate to something like $17 or $18 US or something like that. We are at $90. So the gains on silver have just been absolutely tremendous. But what I want to warn investors about silver is, and especially because I've been in silver for the last 11 years, silver has dramatic moves to the upside, but it also has dramatic moves to the downside. And when the overall broad markets start to break down, you can guarantee that silver will come down with the broad markets. It's a super small market. It's a very volatile metal, and you need to essentially take profits when you get astronomical runs up. Like, for example, when was this? This was that was October of 2025. Right here. This was 2020. So we can see when the S&P 500 rolled over, silver got caught. It went to $11 from a high of 18, but still movement downward into the March 2020. And then we can see it rocket higher up to $30 and then do nothing for the next 4 years, right? We've really only seen this move start to happen in 2024, 2025-ish, right? But we had a big move upward and then a sideways consolidation for the next 4 years. And I don't know about you, but when I see this massive move to the upside, I start to get really nervous. And one thing that I think about for sure is how gold is a little bit more stable. Yeah, it might come down in when the S&P 500 corrects, or if the S&P 500 corrects, but it's going to come down far less than silver. And if we go back to the silver chart, I was trying to calculate what is the risk reward on silver right now, and I'll do that for you right here. So the risk is, I think we pull back to that last breakout point right here. The risk is 39% down on silver. Now, I also think that silver in the coming years could go to 120. So if we take the point from here to here, 120, let's go about there. The upside is 33%. The downside is 39%. The upside is, and then, like I said, this is max upside, is probably about 33%. There is another, the channel that I was actually following right here. This could actually happen right after we get the pullback to the support area and then a movement upward. This could happen and take us to, this would actually be $100 per ounce on silver, and we're talking US dollars here. So if the upside is 39%, or sorry, if the upside is 33%, but the downside is 39%, we're almost flipping a coin here on silver. And that to me is just not great risk reward. I don't like those odds whatsoever. 50-50, no, that's not something that I would really like to play with. So that's why I'm thinking maybe it's time to take profits in silver, move that elsewhere. Oil was one of the moves that, we were talking about a couple weeks back here. And I think a lot of people are looking at the price of oil as well and going, man, this is really cheap in the stocks. They're paying great dividends. This is something that we could definitely move some of our silver profits into. That was my thought process there. And we made really good gains on that trade there in a short period of time. But we got to think about the risk reward. And if it's 50-50 right now, then I got to think to myself, like, I'm not really loving those odds, to be honest. Like I would much prefer something that's like a 80-20, right? Like those are the odds that we want to be playing with. And that's my kind of overall thoughts on silver. I think the next one on the watch list, is the S&P 500. So the S&P 500 is also looking pretty bearish right now. And this is one of the key things that I'll be watching over probably the next month or so. It's going to take a little bit of time to play out here. But one of the things that I want to point out is back in 2025, we were watching this giant rising wedge pattern. And I said, once we started to get close to the top here, we got to be bearish, right? So I was sending notifications out to subscribers. I personally don't have any investments into the S&P 500, so take my thoughts on this with a grain of salt. I don't have any skin in the game on this one. I don't like to trade the S&P 500, and I don't like to hold the S&P 500 for long periods of time either, even though, we've been in an uptrend. But one of the reasons why we've been in an uptrend is because interest rates have gone from like 15% down to 0. And we've also printed a ton of money to essentially prop this bubble up. Now you have to ask yourself, is that even a possible trade for the S&P 500 to continue on? Well, right now we're at 4% interest rates, and we're looking to go back down to 0. We're not going to experience the same pop as we did in the past from going from 16% interest rates down to 0. That's just my overall thoughts. And that's one of the reasons why I'm watching the S&P 500 closely, because at some point in time here, we could top out, and the downside on the S&P 500 is quite large. So one of the things that I'm seeing is that we are struggling to break over that $7,000 mark. We have a breakout here. We did confirm when we broke out. You see the green candle right here. We have confirmation up here, right? But again, we're rolling back over, and more. This is one of the reasons why I think this is actually a bear flag. So when we get a bounce to the downside and then sideways to upward channels, generally those will play out to the downside here. So we're going to break this channel, and we're probably going to retest this support zone right here. If we get there, we're probably going to get like a little bit of a bounce, maybe even a retrace up to here. We just went over some of those chart patterns on the real estate to gold ratio, but what could end up happening is maybe we play out something like this. And we'll watch this play out, but what the most important thing that I think investors need to pay attention to is when we start to break through these support zones, and when we start to break through this bear flag, that is going to signal that there is going to be a dramatic move to the downside. And that first support target, let's just measure this out here with an info line. So from where we are today down to the second point, that's only a 2.4% downside move. That's fine, right? But if we start to break through these support levels, we get to a 5.5% move. And then what's underneath there? Well, you're essentially erasing the gains that you've got since 2025. I would put another trend line somewhere around here. And then suddenly this becomes quite a massive drop. So this is over a 10% drop down to the support line back here. That'd be 11% to the downside. Now, will that happen in a very, very short period of time? Who knows? It's possible, but I'm watching these support lines and thinking about what are the potential moves that could happen in the S&P 500, and this could take down a lot of other investments. When the S&P 500 drops, so does silver. So sometimes so does gold, depending on how dramatic that drop is and how short the drop kind of plays out. But when those drops happen, a lot of the other assets get sold off. And that's one of the reasons why I think it's going to be a great year for swing traders. And I also think it's going to be a great year for those who are a little bit more using technical analysis to maneuver and holding large amounts of cash. So if you are a paid subscriber, go over the paid section of the newsletter. I'll tell you exactly what I'm doing with my own money. I even give you access to that longer term portfolio, but I'm going to use technical analysis to identify when there's a point on the chart that if it's broken, then we got to sell off and take some of the gains off the table. And you're gonna be able to follow that on the paid tier of metals and momentum. So that is where I'm gonna leave it. How long has this video been? I feel like I've been talking for quite some time. Yeah, another long one. So that's one of the reasons why I separated the articles here. I'll come back next week and go over the article titled "Everyone in My Neighborhood is Getting Evicted." There's some super interesting information in there. If you want to get a sneak peek, you can read the full article. I'll leave it in the description. But that is where I'm going to leave it. Thanks so much for watching, everybody. If you're interested in joining the Substack, hit the links down below. $9 a month to sign up for the paid tier. Very inexpensive. And you could also get access to that longer term portfolio and trade notifications. That is the big benefit to joining the Substack there. So thanks so much, everybody. And thank you to the 2 new paid subscribers for joining me on Metals and Momentum. Thank you so much. This means a lot, and I really do appreciate that. And that is where I'm going to leave it. We'll see you in the next one.